Hello, this is Caleb Barney, local real estate agent in the greater Cleveland, Ohio area. And today I wanted to go over an article titled What to Know About Credit Scores Before Buying a Home. So, this article comes to you from Keeping Current Matters. And basically, it says if you want to buy a home, you should know your credit score is a critical piece of the puzzle when it comes to qualifying for a mortgage. Lenders review your credit, see if you typically make payments on time, pay back debts, and more. Your credit score can help determine your mortgage rate as well. So basically, the most important part for a lender, obviously, they want to check your debt to income ratio to see if you're even able to repay the loan. Because if your debt to income ratio is too high, meaning you have too much debt and not enough money coming in, then it's going to be very difficult for you to pay back that loan. And that's how lenders make their money, is they make money off of the loan. So if you default on it, that would be very bad for them. So that's the first thing. They check your DTI, your debt to income ratio, but they also do pull your credit scores as well. So they'll pull from Equifax, Experian, and TransUnion. So all three of the major credit bureaus, and they want to see what your credit score is. And your credit score is basically a composite of your credit history. How well do you, how many loans do you take out? How long do you keep that debt? Do you pay on time? Do you have late payments? Have you stopped paying people? There are blemishes on your credit report that they can see as well. But all of that is to say that you will get a FICO score or a credit score. And generally, anything with a score above 740 is considered very good. But you don't necessarily need a score like that to buy a home. Each lender has their own criteria. And it says, while many lenders use credit scores like FICO scores to help them make lending decisions, each lender has its own strategy, including the level of risk it finds acceptable. So there is no single cutoff score for your credit score used by all lenders, and there are many additional factors that lenders may use to determine your actual interest rates. So those are just a couple of things that they do look at, and obviously the higher your credit score, the better. But it doesn't necessarily mean if you're at a 700 or a 660 or even a 600 that you're not going to be able to get a loan for a home. It just means that because you may be considered a more risky borrower, so to speak, your interest rate might be higher because the lender needs to be compensated for taking on that additional risk. So a couple of things that Experian highlights as far as ways to improve your credit score: your payment history, for sure. Late payments can have a negative impact by dropping your score. Your debt amount relative to your credit limits. So say you have a credit card and you have a $20,000 limit on your credit card. Well, if it's showing that your debt is at $19,500, well, there basically it's going to indicate that maybe you are in over your head as far as making payments. You can't say no to yourself, and as a result, you owe a lot of money on credit cards, and you don't have enough money to pay off that balance. So keep on focusing your debt amount relative to your credit limits as low as possible. And then credit applications can also affect your credit score. So if you're looking to buy something, don't apply for additional credit. When you apply for new credit, it could result in a hard inquiry on your credit that dropped your score. So people wonder, well, why is that? Well, basically, if you are applying for new credit cards and all of that kind of stuff, once again, the implication is, oh, do they need to borrow additional money for something? So when they have a hard inquiry, or when you're opening up new lines of credit, then that could scare a lender off a little bit. So before you ever open up like any new lines of credit, for example, if you're already under contract, make sure you talk with your lender first. Same thing. Don't make any large purchases. I've actually, my first year in real estate, I had a client buy appliances for their house that we were under contract to buy, and it knocked their DTI out of whack, basically, and then they were actually denied their loan. So it was definitely a bummer for them. They had been warned. I say warned, but they had been told multiple times, don't buy anything large. If you're going to, make sure you clear it with the loan officer first, by myself and by that loan officer. And, they still didn't listen. And as a result, they ended up not getting the house. So don't let that be you. Bottom line is finding ways to make your credit score better could help you get a lower mortgage rate, which is obviously very important in today's day and age with higher mortgage interest rates. And if you want to learn more, talk with a trusted lender. I know several lenders that I know, like, and trust, and I can get you connected with them because ultimately I'm just a real estate agent and that's not my area of expertise, but I can always connect you with somebody who can help you learn more about improving your credit and getting a pre-approval as well. If you have any questions about that, feel free to reach out to me. Or if you just want to talk about the housing market, especially in the greater Cleveland area or Northeast Ohio, reach out to me and I'd be happy to have a conversation. Thanks.